This is Ajay, a 25-year-old guy living a middle-class life and earning a normal salary. And just like you, my dear viewer, he also dreams of becoming successful, rich, and enjoying his life. Now let me show you the day which changed his life forever. This was the day he finally got serious about life. He started exploring on ways to get rich. And you know how YouTube works. He landed on a mutual fund video and the influencer promised him a rich future if he invests into mutual funds. And my boy was on fire that day. He immediately took action and set up an SIP and went back into his slumber dreaming about his really rich future that is waiting for him. But can Ajay become rich in the future?
Ajay, wake up.
What are you doing here? Who are you?
Hey Ajay, don't be afraid. I am you from the future and I have come here to help you.
Oh yeah man, you're looking really good. So I'll become really rich in the future?
No, if you're going to be like this, you'll never become me.
Why? I just started my mutual fund SIPs today. And with the calculator, I have predicted that I'll become very rich.
Yes dear, I know you have started investing. These are good mutual funds also. But you're unaware of 3 mistakes that you're making and you're still doing that.
What mistakes are you talking about? See, I started my investment in mutual funds today. An SIP amount of 1000 rupees I'm planning to do for 30 years. And with a CAGR or annual growth rate of 26%, it'll make me 10 crore rupees. I'll be very rich.
That is a mistake number 1. You are only seeing how the market has performed over the last 1 year. But my dear, I've seen both the bull market as well as the bear market. There will be a lot of ups and downs in your life. So in the long term, this 26% CAGR that you're seeing on screen today, you'll never be able to get that. Even the best investors of my lifetime will struggle to have that CAGR growth. And have you even thought about what this 10 crore or whatever crore value it may be, how much it will be worth after 30 years? Inflation is a real thing, my dear, and it will be eating away all these profits of yours.
Okay, fine. That seems very logical. Even in that case, I'll be aiming for 17% and still making a lot of money. That is good enough, no?
So I have only one thing to say. Even a 17 or 18% CAGR, that is an amazing growth rate. Even that you'll probably struggle to achieve. And at the same time, you should be planning your goals accordingly that you have planned for inflation as well.
In that case, I'll just do one thing, which is I'll think about which mutual fund to pick so that I get that extra 2 or 3% returns. Or I'll even think about direct stock investing.
That is the mistake number 2. No dear, running after higher returns and finding a new mutual fund is not a solution for you. In fact, even going after direct stock investment will not solve the fundamental problem that you're having today. That means all these investments will not make you rich. Even if you increase your annual returns by 2% or 3%, it will not change your life. You will still be better off in life, but you'll never be rich. Now, my dear, let us talk with numbers. I know you love that. So, imagine your current example today. You're investing how much? 1000 rupees SIP and you're, let's assume that you will be getting 17% CAGR growth for 30 years. You'll be getting 1.12 crores after that. And if the CAGR increases to 18%, you'll be making 1.46 crores. I know that is still a good amount of money, but that won't make you rich. But what if, my dear, think about this. What if you invested 2000 rupees per month at that same 17%? You would have 2.26 crores. Don't you think that is a much bigger difference than chasing after that 1 or 2%? Yes, so what I'm saying is, let a normal person continue to keep doing this 1000 rupee SIP. That will surely change his life. From a middle class person, he might even move to an upper middle class person, but he will never become rich. And I know your goal is to become a rich person. Make no mistake, your goal should be to make as much money as you can today. As the saying goes, a penny saved is a penny earned, but it will never become a dollar.
But you're me from the future. You know what my current salary is. How can I even increase that investment amount?
I know. You don't have money today. What is there to do? That is what you're thinking, right? But you have something which is much more valuable. you have both your time and you have your health. So use it to learn a new skill that will make you a lot more money.
Why should I even learn something new to make money? I'm sure you remember about Rakesh Jhunjhunwala sir and even Warren Buffett. They are the best investors of my lifetime right now. I can make more money from the stock market itself.
Yes, I knew you will ask me that question. Rakesh Jhunjhunwala and Warren Buffett, they're really good investors. They chose stock market as their active profession and they were really good at their profession. But your profession is something different. Your heart lies somewhere else. You're doing this only to make money. You can definitely experiment and try out investing, but I feel that you should go ahead with your career to make sure you excel in that. In fact, I won't even say that. Start a business, do a freelancing side gig in between your current job and start or think about actively making a lot more money. That is what you should be doing right now. Always excel at what you do and take some calculated risks. This will help you maximize your investment amount rather than thinking about small changes in percentage returns.
Okay. I think I'm finally getting your point, man. So I'll do one thing. I'll work really hard and I'll start earning more money. And that money I'll invest into the market and then forget about it. Live very peacefully and invest very passively.
And that is the mistake number 3. Do a mutual fund investment. All that is okay, but never ever think it is completely passive. I clearly remember the video that you saw today. It says that start an SIP and completely forget about it. But no, that is not how you should think about it. Keeping the same SIP amount forever is not good. Think about increasing your SIP amount every single year. After that, set a particular interval, let it be 6 months or 1 year, and every time you hit that interval, come back to your mutual fund portfolio and reassess the returns that you're getting. Don't forget that a lot of mutual fund managers still fail to beat their benchmark indices. So I won't even mind you investing into an index fund. And at these intervals, ensure that your asset allocation is on track and make sure that you're being patient. When I tell you that to go ahead and check out your investments, it is not telling you to be impatient, right? So be calm, be patient and stay invested.
These are some hard-hitting facts, man. I know I'll have to relook at my entire investment psychology right now. But thank you. I promise you that I'll do justice to the advices that you gave and I hope that I can be rich like you someday.
Well, my dear, why do you think I'm here today? You followed my advice and I became rich. I exist only because of you.
Hi, Ajay here. Hope you like the different video format that we have tried out in this video. Make sure you let us know any and all comments or thoughts about the same in the comment section down below. And make sure you hit the subscribe button as well. And make sure you remember these 3 key points. 1, do not focus on historical returns alone. 2, that you should focus on amount invested rather than the percentage changes here and there. And 3, that investment is not passive. You have to make sure that you have an eye out for your portfolio and its performance over the years. And these are 3 harsh truths that I feel a lot of people know about but don't discuss about it often. So as always, see you again in another video. This is Ajay Ajith signing off. Bye bye.